Ever set a stop loss, only to watch it get hit? Then the stock rips without you? Your stop loss wasn't protection. It was a target. Today, you'll learn how institutions see your stop loss, and how to stop being prey.
Let me paint a picture. You buy QQQ at 50. Solid level. Makes sense. You set your stop at 48. $2 of breathing room. Feels safe. You're protected. Then. 9:35 a.m. A red candle smashes through 48. Your stop triggers. You're out. Done. Taking the loss. And at 9:37 a.m. QQQ bottoms at 47. 50 cents below your stop. You just got stopped out, at the exact bottom. Coincidence? No. Here's what they don't teach you in retail trading courses. Institutions don't trade like you. They can't just click buy. When JP Morgan wants 1 million shares, they need 1 million sellers. Where do they find those sellers? Right where you placed your stop loss. Your stop loss isn't protection. It's a flare gun. It tells them exactly where you'll sell. Think about it. Your stop at 48 means you must sell at 48. Multiply that by 10,000 retail traders. That's a wall of forced selling. Institutions push price down to 48. They know what happens next. Stops trigger. Retail panics. Everyone sells at once. And institutions, they're waiting with buy orders. Scooping up every share. They see your stop loss cluster on their order book. They bought 1 million shares at the bottom, using your panic. Every retail trader who panicked, fed their position. Then, price rips. Because the selling is exhausted. They own all the shares now. No more sellers. Only buyers. And they drive the price up, on empty. So how do you stop being the prey? 3 rules. Write these down. Rule 1, never place stops at obvious levels. Round numbers. 50, 48, 45. Everyone sees those. So do institutions. Instead, add noise. 47.37, weird. Yes. Safe. Also yes. Rule 2, use time-based exits, not just price stops. If the trade doesn't work in 30 minutes, just leave. No stop needed. Stale trades turn into losses. Time is your hidden stop loss. Rule 3, watch the pre-market highs and lows. That's where stops cluster. Pre-market high at 52. That's a magnet for stop hunts. If QQQ made a pre-market high at 52. That's a stop hunt magnet. They'll push above 52, grab the liquidity, then reverse. So you enter, after the hunt. Not before. Let them run the stops first. Watch the sweep happen. Then you enter with the institution. Not against them. You're riding their wave. Not swimming against the current. Here's the setup I use. Every single day. 5 steps. Write this down. Step 1, mark the pre-market high and low. Before 9:30. High at 52.30. Low at 48.90. 2 lines. That's your battlefield. Step 2, wait for the sweep. Let price poke above or below. Don't chase. Don't predict. Just watch. Step 3, watch the reversal candle. It needs to close back inside the range.